Hi, welcome to my financial markets recap for the week. It's John Bannon here from ComhlaTech.com. Choppy week this week. Ended the trade on last Friday and got out today, so losing trade. Boo-hiss, right? I hate losing trades. Who doesn't, right? They're part and parcel of the game, obviously. You protect your risk. When you're wrong, and we were wrong on this one. So we're statistically wrong right about 7 times out of 10, about 70% of the time. So we're going to have losing trades, and we've had a couple this year already. So we're holding our head up a little bit. We're certainly ahead of the market, but it's a challenging time for sure. Very, very choppy market. Still a lot of uncertainties in the market due to the ongoing war in Ukraine, obviously. But from what we're looking at, our cycle projections, May is looking very bullish. So we've got to get through a bit more chop, I think, and then into May we'll see some clear trends showing up, and that can hopefully mean, from our cycle projections, that something good is going to happen out of the war. Hopefully, something will end. The conflict will end or get close to an end. We can only hope, right? So that was the system update. Market got off to a really bullish start for the week, actually. Then quickly faded on comments from the Federal Reserve. Two of the Federal Reserve governors stated that they were expecting a rapid increase to fight inflation, and they were outlining they were really committed to fighting inflation. So that really kind of spooked the market on Tuesday and Wednesday. And the Fed minutes were actually released on Wednesday, so this is the 2 p.m. on Wednesday release of the minutes from the previous meeting. So it's just the minutes, it's not a press conference or not a meeting itself. And it was showing that it wasn't quite as bad as the two Fed governors that were speaking were making it out to be. Seems that most of the minutes were talking about modest reduction and it being done in stages, like $95 billion being taken off the table, not big swaths and 0.5% interest rate hikes and things like that. So not quite as bad as people expected. It seemed to cheer the market up a little bit. It came down a little bit towards the end of the day today, but apart from that, it wasn't too bad the last couple of days. Kind of sideways movement. Back to the elephant in the room, the war in Ukraine. It was reported that Lithuania has cut ties with Russian gas this week, having planned to not be beholden to Russia over the last 10 years. They've been planning to not be attached to the need for Russian gas for the last 10 years, so good planning on their part. And Germany admitted that not doing quite as well in terms of their planning. They just didn't see it happening, so they're now scrambling for ways to stop the flow without it leading to shortages, obviously, so that is a big headache for Europe as a whole. Shell Oil expects to take a $5 billion hit on its Russia exit. This write-down is the first look at the impact on the war in Ukraine in terms of Western oil companies to completely cut the Russian exposure. It was also reported that Exxon will have record profits this year because of the price of oil going up so much. However, they're writing down something like $3 billion in abandoned projects that already started in Russia, so probably going to eat into those profits quite a bit. And the news today, obviously, the strikes on the train station and the previous reporting of the aftermath in Bucha, forcing the West to come up with further and even more comprehensive sanctions against Russia. So that is obviously ongoing. We can only hope for an end to this conflict, and the sooner the better. It's sending the market completely wild, obviously, from ComhlaTech's perspective. But obviously it's more a humanitarian problem than what we've got, right? So hopefully that conflict will come to an end sooner rather than later. And this week, some news on COVID. China has extended its lockdown in Shanghai indefinitely, forcing 26 million people to stay at home. So China's zero COVID crackdown is slowing its economy, obviously, and really choking up the global supply chain, which was already having some trouble. So a lot of bad news out there right now, looking quite ropey, and we'll be dashing in and out a little bit here and there towards the end of April, but not staying in for too long. More longer trades are probably going to happen in May, where we're expecting a good recovery. So pretty well out there. Lastly, an interesting fact, Uber users in the UK will be able to book trains, buses, car rentals and even plane rides as Uber strives to create a super app status. So this pilot program could obviously go into other countries too. Very interesting development for the company. They're expanding well beyond, because obviously initially took over the, really going against taxi services, which have been around forever, and really displaced that, really disrupted that industry. And now they're talking about going into planes and trains and buses, so very interesting to see how that pans out and spreads throughout the rest of the world. That is it from me. It is Friday, it is time at Hand Tools. Thanks for watching, and bye for now.